25 in the other, and in the other, let's see, get that correct. Here we are. And share my screen. See, I didn't share the screen on this one. I was working with Paul this morning trying to help him. There we go. So I should be sharing there, Walshy.
Yep, I can see.
Okay, I'm gonna turn this down just a little bit. Make sure it's not too loud there. Share here. Okay, so I'm streaming to 3 places here. We got this loaded. What I'm looking at right now, we're above the Tinkinson. Right here at the open. So we're bullish right now.
Order filled.
Again, guys, this is not trading advice. I'm not actually connected to the market here. This is a simulation account. We're at the top of the 3 there.
Stop filled.
Bullish here, but on the lower, on the smaller.
Order filled.
Bearish here. So what we see is, so you'll know for context, we're looking at positive 3 is oversold, overbought, and negative 3 is oversold. So we got a guard in this instance here. It's good to pull this down. I don't know how we got 18.
Stop filled. Stop filled. Order filled.
3. I'm on the right. I want to make sure I was doing small this morning. Take it and bump it up, tighten it up. I didn't get to do it in time. Market's moving fast this morning, so you'll have to be fast. Or it's going to eat you, or wait, not trade this morning. Very fast, very volatile. Zero line right here. It's, you can continue either way.
Stop filled.
So a lot of times, since we have a positive 3, negative 3, kind of on your y-axis right there, sometimes whenever you have a move, it'll pull back to the 0 line and continue, or from the underside as well, do the same thing. So keep that in mind when we're looking at the lower B4 indicator. I know this morning is mainly about Ichimoku, but talking about things that I monitor every morning when we're doing our live trading. I don't have my price line, and I apologize.
Stop filled.
I don't have time to go back and
order
put that
filled
on there. I have my own price line indicator that I've been building, and I took it off last night and forgot to put it back. So my apologies for that.
Stop filled.
We have a break-even feature here on our CoPilot Pro, which in fast-moving price action, it's a good thing. Ichimoku wise, we're under the Tinkinson, so for that's bearish. We got just looking at the forecast here, in about 369, probably about 9 minutes, we should have some bearish activity. If it's going to work out to the bears, looking at that, we got a trend line right there. We need to break that trend line. We need to break that support here. There's move possibly starting here already. Still got room to the downside here. Break it even.
Stop
because we're at the low of day right there, low of session right there. This is one of our lines from our
Order filled.
CoPilot Pro. Got some heavy hand activity there. They're trying to sell it off there at the lower part of the session there. But we're losing momentum here with our lower B4 indicator, as indicated by the darker histogram starting to come in right there. Zoom in, look at our levels, look at our volumes coming here, try to understand what's happening.
Stop filled.
A lot of volume built on that candle. It's going to be a candle that's going to make a determination, and it did, and it determined they're going to go down, so that's good. That's in line with Ichimoku. Remember I said in a few minutes, well, it happened a little faster than what I anticipated. This is the push, the drive to the downside already initiated. We got room to lock that. Next stop, guys, down here. We're at support.
Stop filled.
Notice how the volume built at support right there. We went ahead and locked it in. The reason why I do that with my system is because it's so sensitive to order flow that if we start getting back into a move,
order filled.
There it is. It'll get me back in. It's like an insurance policy to me. Go ahead and guard that capital, and if it's going to break it, I'll get back in anyway. And I did not get to. I missed that talking. I missed that opportunity
Order
talking
filled.
there, guys. That's one of the sacrifices you make. Can't trade as active as you'd like when you're trying to discuss these things. I'm going to mitigate risk. I don't like that bullish position. It goes against the Ichimoku, and if it comes up to the zero line, the lower B4 indicator, it could be a continuation back to the downside. So what I did is I went ahead, I let the system get me in, but I managed my risk from the back side of that. I have automated edge with the system. It's proven itself over time. So I try to manage my risk with that edge going, putting that edge first, then managing the risk from the trade management side aspect of it.
Order filled.
Ichimoku wise, forecasting here, I'm bearish. We come down towards the zero line, or right on the edge of in the zero area right there between 0 and 1. And it gets choppy in that area. That's kind of our chop zone in between 0 and 1 and -1 in there. Sometimes when you see your chop, that's where it's going to be chopping at.
Order filled. And
sometimes it's better to turn the system off in those instances. I'm going to leave it on this morning. Again, I'm not trading live. This is just simulated, so.
Stop filled. Stop filled. Order filled.
We made it up to the +2. It can still have room to the upside. I'm going to change the, I got reverse here. I'm going to do nothing. Let me try break even. So we have different options here with our CoPilot Pro whenever an opposite signal fires. We got to reverse, do nothing, exit, and break even. I'm going to try to break even when an opposite signal fires. I'm going to change that a little bit so I don't get flipped over quite as much. Have more time to evaluate the situation. Overall, I am bearish. So that being said, if we get down here, we're probably going to break that line. I want to get bearish below here, below 67.26. I want to break that even. I didn't quite get the opportunity while I'm talking.
Stop filled.
I was able to.
Order filled.
Was able to lock that in. So guys, I might be doing less talking and more actual
Stop filled.
trading, so bear with me. Overall, we're bearish with our Ichimoku,
Order filled.
but it's moving quite a bit in these candles.
Stop filled.
Whenever I have days like today, I realize I gotta scale down typically if I'm going to continue to trade this. You know, quite a bit of movement, and while it's moving in one direction, it oscillates here on a smaller chart quite a bit. You've got to be able to get ahead of it, of that general momentum, and add to your position as you're continuing in that direction. Like right now, I should be putting a short in. In fact, I'm going to reverse this if I can. Let's go up here.
Order filled. Order filled.
What needs to be happening is I need to be, and it's hard to do when you're too big. Hold that up here, giving it room to have its movement in here. It's hard to do that.
Stop filled.
It's too wide of a range to really do that. You see, +3 is what we're looking at for topping. Turn my strategy back on. Again, guys, I'm not live this morning. I'm not copying this. Just in sim mode. I don't typically trade on Fridays. And I was trying to get set up. Well, look at the speed of the tape there. Didn't want to be involved in that. This is too volatile to be trading. Let me see why this thing's paused here. I was going to say I was going to add my other indicator. Let me go ahead and take the time to add my other indicator. I got to have a price line. Get that strategy re-enabled. Again, we're overall bearish with Ichimoku. We're still below the Tenkan here, but it just has so much movement in it right there.
Order filled. Order submitted. Order filled. Stop filled.
Like I said, you got to get ahead of it with some strength.
Stop filled.
Be able to make it count.
Stop. Order filled.
It's hard to do when it swings the way it's swinging right now. Just
stop filled.
You got to minimize that.
Order submitted.
Chase it with an order.
Stop filled. Order canceled. Order submitted.
It's close to the zero line. Potential flip if it can hold it here.
Order filled.
Didn't quite get it.
Order canceled. Order filled.
Don't like that bullish.
Stop filled.
Okay, what I'm gonna do, I'm gonna turn off all long signals. Try to trade our short ones. Go up to 6 contracts at 30.
Stop filled. Stop filled.
Yeah, this is just too much to be trading this morning. In fact, I'm going to change candles to a bigger candle.
Order filled. Stop filled. Order submitted. Order filled. Order submitted. Order filled. Order submitted. Stop filled. Order filled. Order submitted. Order filled. Order canceled.
We're down to negative 2.7677, whatever. We're close to -3, so we're down to our lower extremities here. We're looking for a bullish, so I'm gonna turn my bulls back on now. It could work either way. I'm looking stronger bearish. If that does work to the bearish side, just measuring the potential of the move. In Ichimoku, since we're talking about Ichimoku this morning, even though I'm over here, in Ichimoku, you move in series of N waves. The market is said to move in a series of Ns. So I was measuring the move here from here to here, just thinking of that as one impulse. Just one larger impulse, looking at the bigger picture of it. And then thinking, okay, impulse, pullback, possible impulse. Looking at it from that perspective, if we go down. Right now we have a chance for this to pull up some, come on back up and test this area here. That's why I went ahead and turned my bulls back on, my longs back on. The other thing that you'll notice is my kiss dots are firing here. Now this is a newer version. This is the pro version of our kiss dots that I'm still working on. I haven't released to our team yet. I'm still monitoring it here. These tools are getting pretty close to letting loose.
Order filled.
Guys, so bear with me. It's been a long process building them all, but this is our kiss dots. A little something different about these kiss dots. They highlight differently at different conditions. Sometimes the kiss dots don't work. And sometimes you don't know when they're actually in play and actually initiating and that pullback happening. So I put a little thing in there to help with that. This is the wrong direction here. We need
Stop
to
filled. Order filled.
pull him back.
Order submitted. Order filled.
Why did we expect to pull back? Because of my kiss dot. And there's our kiss line firing. And that's moving quite nicely.
Stub filled.
The top, squeezing, we're looking for the short. Now, keep in mind, I did change these candles over from 210 to 220, but they're an even. There's an even increment there of 10, so it keeps us straight on our positive 3 and negative 3 here on our y-axis. So we're still looking at for the same numbers. Looking for a short now.
Order filled. Order submitted.
Let me show you guys something with our kiss dots since we're talking about Ichimoku this morning. This was our TK cross right here with the Tinkinson and Keatonson. By the 9th candle, you're supposed to come back and touch the Tinkinson, which we did. 3, 4, 5, 6, 7, 8, and 9. We touched by the 7th. 9 is an average. And then the next expectation is to come back and kiss the Keatonson, which is this gold line. By the 26th. 3rd, 4th, 5th, 6th, 7th, 8th, 9th, 10th, 11th, 12th, 13th, 14th. 15, 16, 17, 18, 19. It's supposed to be 20. 21, 22, 23. We've already touched. So this is where you're either going to break and break the trend and be a reversal, or you're going to get a potential Keatonson bounce here in this candle, in this position. A Keaton bounce would be a return to the downside momentum. We set up in anticipation here for the Keynesian bounce to the downside.
Order filled.
And that was the right
Stop
call.
filled.
Price action slowed down a little bit. It's not doing that craziness it was doing.
Stop filled.
A little easier to maintain here. I've changed my candle size too. I believe that's helped me a little
Stop
bit here.
filled. Order filled.
Okay. Getting a lot of volume built right here, so it's about to move on us, guys. It's about to scat cat one way or the other, and believe it may break out to the upside here. I was looking at that Keynesian bounce, but it's we are getting a lot of volume, so it's going to break one way or the other. Tell you what, I was going to try to lock that in there. Missed that opportunity, I think. Maybe not. Let's see. Because I know it's gonna get us in one way or the other once this thing starts moving. So I try to play that to my advantage. If I'm able to lock out, I'll lock out. If not, I'm gonna mitigate loss.
Stop filled.
Still got volume building. Notice the amount of volume at this candle versus the other candles. You'll see that this is substantial. It should start moving somewhat nicely.
Order filled. Stop filled.
All right. Pay attention to your lower B4 indicator here, guys. It's free. Go to b4indicators.com and pick that up for free, guys. If you don't have it, it's a free indicator. Get used to it. It's very, very accurate. You know how to use it. A lot of people tell me, Chuck, I love your B4 indicator and everything, but it's not as accurate as my Williams percent R and my awesome oscillator and my doubled up stochastics and my 1233 on my stochastic and all this other stuff. And guys, I appreciate your feedback there, but you have no idea what you're talking about, because they don't know how to use it. They think, well, it's just because of the buy and sell signals that it produces. Those are very conservative. And we have a technique that we use when we actually trade those as well.
Order filled.
Gives us more edge in any signal. But anyway, just be mindful. I probably should have done that short there. Let me mitigate that.
Stop filled. Order filled.
Doing more talking than I need to be paying attention to my chart. We are still squeezing. It may push extended here a little bit, or it can flip. We're at that stage here at the -3. Remember what we said about the 2s and the 3s. I mean the 3s and the 3s. -3s. It may go back up here and test this top of this trend line that we got going. Getting to where the top of that trend line is. We're losing momentum here with the lower B4. Let's tighten it up. So guys, you'll see me flipping back and forth here with my main chart, locking in like that, and locking in. So basically it's the macro, looking at the bigger picture, and then coming back in, looking at the details. This is our footprint. It's a really simplified footprint. We don't go into a lot. We try to keep it simple. Very much into clean charts.
Stop filled. Stop filled.
I look at his charts and they're like the cleanest thing you ever look at. He keeps it simple. We don't want to limit that. I'm going to pull that up. Guard it from this side.
Stop filled.
We're looking for a short now.
Order filled.
Okay. Keep in mind this long position, guys. It may run on some extended fumes there, but it should be fast and short-lived. So with that in mind, I mitigate risk. Take that on the head if it hits me. Take some. If it breaks up here, push to the highs. That's great, but I'm just going to give it a little bit of room here to do whatever it's going to do. To really get short, I need to get below this trend line anyway.
Stop filled.
We should be getting volume. I was just fixing to say that, and I come down here and look. Sure enough, we're getting our volume right here. So this is a battleground. The battleground's building in this value area here of this candle. So there's a trade opportunity on after each edge here, and it's shifting, changing. Volume still pouring in there. Buyers popping in here. A lot of retailers were buying positions here. Market makers selling to them. Look at the extravagant amount of volume building here. Look at the size of that versus the average candles. The average bar of the amount of volume traded. So that's a key to understanding when you're going to have some extraordinary movement, guys. Right now, this looks really nice and bullish. It looks like it could just pop up to right here, and it may very well do that to the flat Kijisen, right? So this will be our target with Ichimoku. Let's just kind of go over, since we need to be talking about Ichimoku here.
Order filled.
One of the targets would be there. That's the good thing about Ichimoku. You don't need a lot of lines on your chart because it already does that for you. Now we are extremely pushed here. So even though it took me into that bullish position, I'm going to be a little cautious. I'm going to mitigate that. In fact, I'm probably going to lock that in.
Stop filled.
I don't trust it. And it may very well shoot all the way up here, but I don't trust it enough to my kiss dots. What it's doing is there's a trail in the kiss dots, a way that we trail, a methodology that we use. And you'll see that when those dots form, so I went ahead and built some of our techniques into this Kiss Dot Pro. And I'm going to blow that up. We have some of our members here that are going to be receiving this, so I want them to see what it's looking like. This has been this progressive trail, so this is where your stop loss from this, when these kiss dots started firing, that's your bullish position. This is where your trail is really supposed to be at right now, according to the methodology. There are some edge cases in that. Different things happen. And I tried to work out some of the edge cases. But if you could have held that through here, this is where your stop's supposed to be.
Order filled.
You.
Stop filled.
It's pushing that high, like I said, that high extreme push.
Stop filled.
Which I didn't want to take.
Stop filled.
But it came up onto where we were talking about it. It's probably going to continue coming on up into here. There's another thing that I look at right here. This is a bullish sign right there. I think a gist of the move has already been underway here. This is something we look at with our system in our Ichimoku. This is our quality line. This other line that you see here cuts in the background, comes across, comes down right there. It's in the backdrop, working there behind the cloud. That is a quality line. It's for determining the health of the Kumo, the quality of it.
Order filled.
As I said, this is typically a bullish sign, but in the context of where we're at, we've already had that bullish move. and we're extended on fumes, I'm thinking the better situation here is for the bears. It may come back up here and tag this again, but I don't know if it's going to have the strength to be able to continue on. It may, but let's see. Oh, a lot of volume here. Still. Okay, that doesn't look as healthy to me for my position. For that reason, I'm going to mitigate some of my exposure.
Order submitted. Order submitted.
That right there looks bullish. That look, of course, I said earlier, is part of our bullish positioning. I'm in the bears, but if it does push on up, I'm gonna take advantage of a little bit of that headroom up there. Of course, I don't want it doing it. I prefer the bears, but so what we'll do is we'll pull here, pull there, pull there. So if I do get any of that, I can try to lock in a little bit of that headroom. I think I'm hiding behind the POC here, so that's fine. That's one of the good advantages of having the order flow, the footprint opened up. You can see, I mean, in every situation, it doesn't always hold true, but for the most part, you understand where your volume's at, where your protection's at in your position. You know, sometimes it rocks through it, but it's very valuable information to have. So according to our KISS dot methodology, we're still holding that long, or should be still holding that long. We're in a short here. I'm just showing you what our little rework of our KISS dot did.
What are the arrows, Chuck?
That's just, your KISS dots would have been over by now. You wouldn't have any more KISS dots printing. That's just telling you to keep holding the position. Filled.
And is the caret inside of the blue caret inside of the black square, is the indicator, B4 indicator?
No, that's to show you. Let me show you. I went through and redid to show you signals and encased them all. So that's just to show you. Let me turn off to show you just what the KISS dot. Hold on.
Stop filled. Stop filled. Stop filled.
Drawings.
Order filled.
So our KISS dot started firing there. You can only see. I'm gonna have to increase the magnitude of it, but there's a difference between this KISS dot and this KISS dot. You can see a slight variation in them. You can see a variation in these two. This one has a highlight on it. This one has a highlight on it. Meaning that's the likely turning point. So sometimes you didn't know which KISS dot was going to actually come into play. You know your KISS dots are firing, but is it going to turn? Well, I put order flow into it so we can see when it's going to turn.
And what's the writing in blue there?
The writing in blue right there is stop loss.
Oh, that's your stop loss. Okay.
That's your stop loss. So I gave it a couple extra qualities, Walshy. I told it through order flow, reading order flow to understand when more likely to start turning for us.
And when did you enter?
Okay.
When would this have entered?
So I need, you know what? I need to go ahead and put an entry on there as well. I probably need to put a counter trend entry on there. It's at the close of this candle.
Was it raising the stop automatically, or?
Yeah. So the stop loss didn't initiate to after here. This is where the stop loss started trailing.
Okay. Oh, nice. I like it.
Yep. And so this got. And I need to make, like I said, I need to make this more profound.
Yeah.
I'm just working out the logistics of it right now. I'll fine tune it, put lipstick on it whenever it's up.
Okay, good stuff.
Mm-hmm. Yes, sir. And see, same thing here. This one was doing it, had a stop loss, and this one stopped you out here. There was your KISS dots there. It was short-lived, and not much happened in that one. And you can see the history of it. This one, there was your entry here. Short-lived. I mean, this was in pre-market stuff, so I mean, it's not ideal situations. All this was pre-market stuff. Really not enough volatility to make it worth doing. But here in the live market, you can see where it's advantageous.
The KISS system.
Yep. So I went ahead. So I teach all the rules, and I've been making the observances of it for 2.5 years now, kind of.
Stop filled.
Looking at the edge cases of it and understanding better how to use it. And so I have my own little rules that I use, and I said, well, let me write them down and see if I can code them out or get them vibe code them. And I was able to sit down and go over it. Yep, that's a good situation. That's work, and I kind of worked it out and followed it on. So let's build it, and here it is. So anyway, I still got work to do on it. I need to, like I said, I got most of the logistics worked out. You're right. I probably need to put an entry on it. Put an entry line as well as a stop.
Order filled.
We'll work that out. But that's using Ichimoku techniques. Very not known. So our ABC, that was a nice, valid ABC. I just wanted to check the validity of it. That was a nice, valid ABC that I have there. So I'm looking at the significance of these lines here, our targets, whole-sided targets, and how that's lining up with actual price action and what's happening here. So we are exhausted to the upside here. It's pushing hard. The bulls are really fighting this to keep it going. But I'm all right. I need to move these up. I'm all right realizing the potential end of this move. It just wants to keep on. So we'll keep on staying on this side of it. Looking at price action, guys, you know, just take Ichimoku off the chart, look at price, raw price. You know, your eyes going to naturally lean over here to the bottom here at your 67.84 area. And
order filled.
What's nice about that is, remember I said you can just use the flat spots of your Ichimoku. That's what these flat spots of the. Notice that's where the T and K, where the the Kijinsen and T and K. Yeah, you're right. Kijinsen, Tinkerson, and the SSB. They all flatten out at 65. So the area to look at is the 65 right there. Now we got our kiss dots firing again. It's time for the pullback. So the position here is short.
Order submitted. Stop filled. Order filled. Order submitted. Order filled.
Just using my kiss dots right there.
Stop filled. Stop filled. Stop filled.
So what we know from those kiss dots is we know that we had a TK cross here. And we know it's time for Price to come back and kiss the Tinkinson. And there's a difference between this normal kiss dot and this one. That's
Yeah,
where
they're very hard to see.
Yeah, it's very hard to see, but do you see this distinction washing?
Yeah, I do.
Order filled.
Like I said, I have to define that better. I showed it to Barb for the first time last night. He's like, yeah, that's great. Maybe we'll just change it from a dot to an arrow or a caret or something to really differentiate it. And I'm like, well, maybe. I like that it's all dots. Maybe I'll make it I think about making them bigger when the volume.
Then you'd have to change it from talking about it as kiss dots to kiss arrows.
And I don't want to change. I don't want to change it. You know, I don't want to convolute the system there. I don't want to sacrifice that.
Maybe you make the one is an open circle, and then when you kind of, then you have a closed circle when you're pretty sure it's going to.
Yeah. So the ones that are exhausted, and I could do that because exhausted means zero prints. So when you get to the zero prints, it gets clear, like a zero. I could do that. I'm gonna have to think about it a little bit. I gotta work on the other major parts of it first. Then that's the finishing touches on it. So I want to think it through a little bit before I get there. It's a process.
Stop filled.
But it's a fun process. So the expectation is at 9 candles for us to touch the Tinkinson. Well, where's the Tinkinson going to be? Well, we already laid that out as well. Here's your map right here, guys. The show you dots. This is our show you indicator. This is where the actual lines are supposed to be, unless something major happens, and if it does, the status quo is changed and you need to reassess your trade anyway. These dots are going to lay out the future lines and where they should lie. That's what the show you system's for here. That combined with the kiss dots, now you have, not only do you have where it's supposed to come to, when it's supposed to pull back, but where and at what time. The location. Only with Ichimoku, guys, can you get something like that. And then we have the advanced stuff in it. So we expect by 9 candles. That's 1, 2, 3, 4, 5, 6, 7, 8, 9. Boom, there it is. There's the kiss. Then you look for a continuation. Well, we have a methodology to continue the trade after this first These last dots here are, you could go to the previous candle here, and after the body of the close of the body of the previous candle, re-enter. Now it doesn't have to continue here. It could come on down in reverse here. What we're looking for is the opportunity to re-enter over the close of the body of this top of this candle here for the aggressive re-entry. The conservative, of course, would be beyond the last kiss dot.
Order filled.
I think in this case we may have some more selling pressure, probably down to here. Looking at price action, you can see that it pushed up here, got pushed down, pushed up a little higher, got pushed down. There was some bearish activity really prominent in this area right here. So that might be our new bullish support somewhere up in here. What does that look like here? You know, it doesn't look really strong to the bears. So I got to kind of gauge my strength as to how I'm protecting my capital. This doesn't look like it's going to be giving us all, but it's still thick here. So one thing I look at here is the thickness of these bands. We can still exhaust quite a bit, and these bands tighten up. Or if there's a hard hit, that thing will flip immediately and go across that midline. If we ever get across that midline with this lower band here, this lower B4 trend line, if it ever crosses that middle line, that yellow line right there, I need to be the other direction. But right now, it's just kind of drifting and pushing. I'm thinking we could come on down like I did. I drew a line here. I'm thinking we might have the possibility of pushing all the way here.
Stop filled.
I'll let the order flow depict the trade from here out. I've dug myself out of a little bit of that hole.
Order filled.
Quite a bit of difference in where I am now as where I was an hour ago, 45 minutes ago. And the main thing that turned that around is the edge that I've gained from understanding the kiss dots. It has been very instrumental to me. worth taking the time to write it all out and put it in a pro version. Plus, that helps me keep myself straight, because in the heat of the battle, sometimes you don't make the logical decisions that you would make otherwise. And that happens to all of us, myself included. So if you could form a plan when the stress isn't on and have that ahead of time, typically it's better for you. So it's kind of the reasoning behind going ahead and working out these rules and the KISS dots. I expect quite a bit of volume to come in here. You can see a buyer stepped in there. Okay. We're going to go ahead and
Stop filled.
Alright. Now I'll let the order flow do this thing again. If somebody gets excited here, we'll follow along with them. But that's where I was expecting support at. One, by my line that I looked at without looking at my Ichimoku, just looking at price action, that's what I was expecting support to be here. But then, secondarily, which should have been primary for me, because I am an Ichimoku fanatic, was our target, which is, I always want to look at the validity of our initiation from all that. All that's come stemming from this ABC pattern that you see here. And I put Hosada's his logic into the reasoning, so we don't get quite as many of these. In the Western analysis, you'll see ABCs everywhere. Hosada was very specific in where he would put his ABCs, so I have 4 ways of placing these in the system here. And that's the best that I can get it right now without actually being able to hand pick these. It's a little tricky in NinjaTrader to do that. But I have 4 methods or 4 ways within his logic to do that. And you can cycle through that till something looks solid, and that's a very solid right there. And there are your cycles right there. These are your targets, your wave targets.
Order filled.
All right, let's go in here. This is what I'm looking for. The support here, the continuation to the upside. Don't want to limit that. We're guarding far enough back ATM's doing a really good job.
Stub filled.
ATM out a little bit.
Order filled. Order submitted. Order filled.
Approaching our end target. From a conceptual perspective of Ichimoku in analysis. This is what you typically do. Since we're talking Ichimoku, guys, let's go ahead and show a little technique here.
Order filled.
So you see I drew this out here. There's one impulse leg. That's an I wave. That's a V. You put another leg on it. That's the I wave. So this is the targeting system. If it does make an N wave, but you always want to draw a line there and draw a line here. These are your trigger lines. We could start bouncing in between these trigger lines and that thing form a P pattern or a typical triangle that you know in from Western analysis. We could start flagging in here, but this is let's make this so you can see. We'll use yellow since I have it on there. So that's bullish. And anything below that's bearish. Okay, so those are your trigger points. So what could happen right here, we could start flagging in here and start wedging in if this area stays consolidated, which see how the Kijisen and Tenkan right here, the TK cloud, that's inside of this Kumo. They're overlapped right here. So we're in an area of equilibrium right now. This could start wedging in here and trip a lot of people up, including me. Look, I'm in a bad position right here. I need to be guarding it.
Stub filled.
Instead of talking. This could start wedging in here and then finally break whenever the TK cloud here gets above or below the Kumo. So whenever your Kumo and your TK cloud are intertwined like that, you got to be careful a little bit looking at it. Especially when you have your Shoyu dots. Your Shoyu dots is telling a little story too. They're telling you right now it's not likely to start turning up and breaking out to the upside. It's telling, what's the Kumo Shoyu dots telling you? It's likely going to start just drifting here. So with that in mind, I'm thinking, okay, Until I get over this line, I really don't want to trade. Until I get below this line, and this is right now, I really don't want to trade. These are our trigger lines right now. If this does form, which I don't know that it is, but if it does form into this pattern, there's another technique of moving these trigger lines that I usually use on a P pattern. It's not these key points that you start with. Those lines are relevant, but there's a secondary trigger lines, and I have all of that automated on a PNY indicator that I have built. Haven't finished it yet, but I automate that process and draw both of those trigger sets.
Order filled.
I'm going to mitigate that. Where are we at here with our lower B4? We're high on the hog. That's a country trading term that I use. I'm sorry about that, guys. I've been using that terminology since I've been knee-high to a pig's eye. So, yeah, I have to forgive me a little bit.
Stop filled. Order filled. We're pushing a hive session. Stop filled.
I'm going to let order flow tell me whether it's going to take off here or not. Like I said, I'm extending a high on the hog. The reason why you, and I didn't tell you this, the reason why you draw these trigger lines here, I was starting to and I got distracted talking about the other trigger lines, is because That's an I. Combined, that's a V. With the third leg, that's an N. But that could turn into what we know as a double top. That could end up being this. And that being a double top. So that's why you draw your trigger lines. When you draw your I waves, when you draw it out like that, make sure you consider that could be a double top. And of course on the inverse, a double bottom. So you want to use that all in context.
Order submitted. Order filled.
Again, guys, everything we're doing this morning is simulated. Keep that in mind. Okay, I expect this to be pretty short-lived here. I don't expect a full double top here. And I should have been gardening instead of explaining. But what I will do is mitigate. I had the chance to lock that in. Still got 4 contracts going here.
Stop filled.
Lock that in. I'm looking at my show you dots. My show you dots are showing me a potential Kumo twist here. You see this green dot right here and this red. That red's a single span B. That right there is a single span A. That's a Kumo twist to the upside. It's also showing some potential in 3, 6, 9 minutes. Price to start moving. What we typically do, guys, we typically trade in the direction of our Kijins. And in 9 minutes, it says that our Kijin, it's going to start moving up, potential to start moving up with volatility. The difference between these lines that you see here and regular moving averages,
order filled,
is the fact that they are dynamic and they move with price action dynamically. On our lower B4 indicator, we still got a little room here. Hold off there. Okay, now I got room to lock it. Looking at our deal
Stop
there.
build.
I don't like how they're overlapped like that. We still got room to the downside here, coming into the cloud. This is where a lot of your volume is at. There's a lot of support in this area right here. Why do I say there's a lot of support in that area right there?
order filled,
Because you look at the thickness of the cloud. That cloud right there is cast price action back here. What was going on back here? Well, what was going on back here? Right here. Here's that support. It shifted forward, so you know whenever you come back again to test it, you're like, oh, wait a minute. There's support there because you forgot about it here. But now it's showing up in your cloud. That's what that's for. That's why they tell you try to stay out of the cloud. Don't trade in the cloud, because that's a battleground. That's a battlefield right there. Don't run into the battlefield. That's what this trade's actually doing, by the way, running into that battlefield. I don't like this trade. Try to stay away from the heat of that battle. And stay on the, find the team that's winning and hop on in that portion of the battle. Don't hop in where it's hot and heavy. You got men dying all over the place. Don't be a hero. Don't go run into there. Wait till your team starts winning and hop on board with them. Outside of the cloud.
stop filled,
Now remember what we said earlier. We said that the Kumo and the TK cloud, which a lot of people don't have that cloud there. That's just my indicator. I'll go ahead and fill in that T and that K there. I like seeing both clouds. It just helps me understand it. It helps me to look at other lines, to add other lines to the chart where I have a clear understanding of that. That way I can put other lines on the chart and it doesn't get as confusing to me. And I know this may be confusing to some people, but I try to kind of clean that up by putting a Kumo field, a TK field in here between
order
the two.
filled,
Let me show you guys something. There's our kiss dots telling us to enter short. Remember I told you washer we had some edge cases to it. Well, there's your down symbol, still telling you to hold that position here. And your stop loss, you didn't ever stop. You're still guard. It just now took you out. And you could have of course trailed this on down and done better. But pretty solid there what we got so far with the kiss dots that I'm working on. What we're looking at here is the potential of this wedge still working out here. We know 1A that we wasn't expecting a whole lot of movement right at first because the clouds are overlapped but consolidated. So I drew a pattern, drew a potential wedge. Now this may be something more like this. But either way, we weren't expecting immediate movement. This came to our, we have a little area between the 1 and the 0 area there. We've come down here, found potential support. This looks to do a Kumo twist to the upside. This looks to start moving. One thing about these clouds is you want to wait till you make new highs in these clouds. I want to wait till I get above there before I go bullish. If I'm going bearish from the bigger perspective, I want to wait till the Kumo starts making new lows again. This I feel is the wrong direction. Look, I'm not trading. I'm talking, and I'm letting this take me back down. I can work my way back out of this. Let me start paying attention to the price.
Order submitted.
I'm sitting here talking and drawing and just letting it go on, and I'm getting negative in this a little sim thing. Let me start paying attention more and quit talking. See if we can't salvage this again. I was just about to end the session. Try to get me an early lunch today, but I hate to end it with it negative like this. So let me see if I can give it a little effort.
Order filled.
It's 2. Excuse me, guys.
Stop filled. Order filled.
Check out trail.
Stop filled.
I'm gonna let it do its thing now. 5400.
Order filled. Stop filled.
Guys, there's no way for me to react as fast as our order flow reacts. Like I said, I don't like being in the heat of the battlefield right there, but if the order flow gets me in and it's moving, I'm going to ride it.
Order filled.
This is doing a deep dive to the downside before it pushes. I think it's going to push hard to the upside. But I think it's taking that deep dive. There's a principle I teach in the room called the cheek out trail. Walshy was there right from the very beginning of it with me. We called it the squiggly analysis. So I learned little principles in Ichimoku from watching and observing and looking at it. I'm like, well, wait a minute, this is a phenomenon. This happens. I see it happen over and over again. You can't help but recognize it. And so I start thinking I'm smart and start naming this stuff.
Stop filled.
Think I found something new.
Order filled.
Come to find out, it's some of their techniques that they do, and it's just secret stuff that you can't find anywhere. And we couldn't figure out what to call it. And I like to poke fun and play and make light of things when I can to keep the stress off. So it was my squiggly analysis. And come to find out, there is a squiggly analysis in Ichimoku, and they call it the cheek out trail. And you have all these Ichimoku scholars out there. Take the cheek out off your chart. It doesn't do nothing but causes confusion. It's past price action. That's not relevant. And they're morons. have no idea how to trade Ichimoku. Chikou is one of the most important things you have. I really can't sit there and say one line is more important than the other, and a lot of people will try to do that. Because it's an entire system and they're all codependent upon one another. And when the more that you learn about it, the more you realize that this is just as important as that, and that's just as important as this. At first, it could have that appearance, but the more you learn, the more dependent you become on the entire system. Now, I am a student of Ichimoku. Here I am back at -9. I'll let 3,400 of that just happen, not paying attention to nothing. So let's see if I can't dig myself out here before I go eat. Chikou Trail, what we're talking about, I'm bullish. I expected it to come down. Let me draw what I'm talking about. I expected, here's a Chikou. I expected it to pull down into this valley here. Now my expectation is for it to push, pull back, to coincide with this pullback right here, and have another push to the upside, the measured move, somewhere up in there. Looking left, where does that bring you? Right up in here. Now I ended that a little early because I was something like that. Where does that fit in our narrative? Looking at the lower B4 indicator, do we have room for that to work? Well, it could come up, come down, and then push back up again off of the 0 line if that happened to get to the 3. Did we do a pullback? Yeah, we did do a pullback. Hold on. Push up, pull back to the 0 line, push back up to the 3. And that works out about right. Okay, so that looks structurally sound according to what we have here. What does that look like with the Kumo here, the Shoyu lines, the potential here? Well, it looks like we're going to have some weakness here and some weakness there. So that may take a little bit to form out if it is going to continue to the bullish side, because there's some weakness. Here, see that curve there? That curve there? You don't like that in your position. I want to see that these Shoyu dots showing me some path forward, upwards, not contrary to my position. Because we typically want to trade in the direction of of course, the Kijinsen, but also all the lines. These are called Hane lines. Hane meaning half price. They're derived from half price. That's what makes them more. That's what makes them. You could say an SMA or even an HMA or EMA, exponential moving average. You have all these different types of moving averages. Some of you have zero lag moving averages. They try to be as proficient as possible. None of them are as proficient as as these Ichimoku lines that I can find. The reason I say that is these Ichimoku lines, they are dynamic. They turn dynamically as price turns because of their formula, their calculation. So I don't necessarily
consider Ichimoku to be lagging in that regard. I look at it as more of a forecasting tool to begin with. So most of your traders, when you're talking to them, they say, well, this is where we are right now. And that's the best I can do. Well, I want a roadmap. I don't want just right now and the best I can do. I want a potential path forward. I want to see where I was historically, and I want to see where I'm at right now. And really the only way you can do that is looking at Ichimoku. Now, what do you mean by that? Well, this is my potential ahead of me. That's the SSA and the SSB. My cloud, my Kumo, the comprise my Kumo. This is where we're at right now, my Tenkan and Kijisen, live, dynamically. This is dynamic support and resistance right there. And then Chikou is covering my past. And plotting back here clean behind me, showing me when I get to these important levels. Reminding me, because sometimes you could forget when you're focusing on price here. You could, even though you're looking at it live, you can still forget where you're at in context. It's very easy to do. And once your mind gets focused on looking at Ichimoku, it's a constant reminder. Hey, Chikou's coming to that level. Chikou's coming to the edge of that cloud. Chikou's coming to that previous flat spot where you may have already kind of forgot and didn't see it. It's just, if nothing else, it's a secondary reminder. It helps me focus. So I drew this a while ago just out of speculation. Let me go ahead and kind of pull it down here now, fine tune that. And this, more like that, can be tuned as well. More like that. What level was it? Let me get it out of the way for now. Get this one out of the way for now.
Stop filled. Order submitted. Order filled. Order submitted. Order filled. Order submitted. Order submitted. Order filled.
Built a pretty strong base right there.
Stop filled. Stop filled.
Cheek out trail. The old squiggly analysis. Coming to fruition.
Stop filled. Order submitted. Order filled. Stop. Stop filled. Order submitted. Order submit. Order filled. Order submitted. Order filled. Order submitted.
Well, so if that does work, let's take some of these little lines we got all over our chart. If that does work, what's the measured move on? Again, Ichimoku principles. Where's the trigger lines? Remember I told you we had secondary trigger lines? I would say one would be right there. That'd be possible entry point.
Booking.com has stays for absolutely.
I tell you what, I'm just going to move this one on down because I don't want to take time. One right there, and let's take that one.
Perfect.
Move it right there. There's our secondary trigger points.
At least there's free cancellation.
That's where you basically want to enter it.
Wait for the perfect weather. Gorgeous. If a vampire can find that.
Order filled.
I want to let order flow enter me here. Versus me resting orders here. We got to break over that peak right there. I mean, I'm already in a trade here. If order flow does signal here, I'll place a resting order. Like that right there.
Order filled. Order submitted.
A little high here, 2.71. I usually consider that chasing. But this is right at the cusp of a potential breakout, so
Order filled. Order filled.
I should have stopped earlier when I was a little like 2K ahead, 1800, 2K ahead, whatever it was.
Order submitted.
No, I don't want to do that.
Order canceled.
Still unsure right here. I want order flow to make the decision. Looks like we're going to get some more squeeze activity here. Getting a lot of volume. That's our trigger line right there. What you can find sometimes happens is when you learn how to do your trigger lines on your little P patterns, sometimes price can just echo in those areas right at the apex of your pattern. Especially whenever the Keynesian and the T and the K cloud is overlapped with the Kumo. You're in a position of equilibrium right there. A position of balance. Now, if I can see that these lines are going to take off to the upside, this looks like it'll take off to the upside, I can buy into that bullish move if we break over this trigger line. Let me look at my other chart. There we go. That got us in. Our next area of interest is right here, right where we're at. Value area, high of that previous bar. buyers right there. We're on the extreme side of the highs. Need to be careful with this. It may push all the way up to here. But now that I got room to lock, I will lock that.
Stop
Again,
fill.
I am just simming this. We come to one of our major levels. It's still in play. And you'll notice how price started drifting off there, started finding resistance there. Let's see what it's going to do. This is an area of opportunity here from here to there. Right here. But we are extended. Some of that needs to sell off. People need to take profits. Let's see if they're going to buy back into it. Retailer's weakened on his buying. Retailer stepping back in, buying positions. Still have some health in the cloud here on the quality line.
Order filled. Stub filled. Order filled. Stub filled. Stub filled. Stop filled. Order submitted. Order filled. Stop filled. Stop filled. Order submitted. Order filled. Order submitted.
Guys, what I'm looking at the support areas here. Overall direction, tone of the market now, bullish. Bullish here, getting above the cloud, above the Kumo. Potential turn up. Support here at our bottom line. Holding that support down below here. Looking for a position to get in. If we get above this value area here, to buy back into some potential strength. Hoping for a push at least to here or here. Which lines up with our pattern we got going. The cloud's now making new highs. The Kumo is now making new highs. See that? You draw a line right there. It crossed over into some new growth, potential growth.
Order filled.
Same thing here. You take that same metric, pull it over here, look at it in your TK cloud, potential growth. All right, we've hit our target. Time to guard capital, guys. Garden with enough room for some one to grow on. Keep in mind we're at that end target. See, these lines are still prominent, guys. They're still relevant. That's why we still have them here. They're not going to be no longer relevant until we get past 172. Guys, I've got to go take care of some business. I may not stay on here much longer. Just showing you how I look at the market, how I use my Ichimoku. Hope it's been helpful for you. I'm going to go ahead and end this session. I got 3 streams going on in this one.